Good evening and welcome to tonight's member webinar where we look at ASX investment opportunities in review for the 4th of November. The information covered this evening is general advice only. If you'd like to know more about the Investor Signals products, please visit our website or ring me on 1300 614 002. Starting with Starting with a graph of the Nasdaq, first of all, I'll just load up the watch list here. The indices are rolled over and now sitting below overhead resistance. Obviously, we've got the US elections this week, but we've started setting up some short positions in inverse ETFs and some short exposure through index futures. Any sort of break back above the moving average or the overhead resistance will obviously the market at this stage is probably leaning towards a Trump victory is going to be bullish, but I don't think there's any certainty in that. But any reversal back through these resistance lines would have you shutting out any short exposure. But for the moment, we've got the lower overhead or lower high structure in place, price action below the moving average. So we're not too aggressive on the buy side of the market. There's still buy side opportunities where deep value or at least value presents, and we'll have a closer look at those opportunities this evening. In the case of the XJO, we're now about 300 points roughly off the high. Markets below the moving average. You could shift this overhead resistance down a little bit further, start thinking about sort of, any move back through that's going to be bullish, but ultimately it's really dictated by the US indices there, and the S&P 500 sitting sort of below that, call it 58.50 level. If we have a look at what's gone on the advisory blog, just started updating clients around the US tech stocks that reported last week. And in summary, Meta probably has been the highlight. If we look at the algorithm history here, it switched from sell conditions into algorithm buy in mid-23, and the stock's up about 100% from that point in time. Amazon was in the model portfolio. It was closed out in September. The concern here is probably the multiple that Amazon trades on. But if we have a look at the algorithm, it switched from sell conditions there into algorithm buy, delivered about a 47% return across approximately a year, 363 days, but is under sell conditions. It's really breaking out into a higher high, so we'll just see what happens there. It obviously could sort of rally through the resistance, pull back, create another algorithm buy, in which case it will be added into the portfolio. But for the moment, what we're looking at is more of an overhead resistance and some caution around the PE there. Microsoft switched from sell conditions into algorithm buy, now under sell. So again, I've got the overhead resistance in place there. Woolworths, again, this is an income contributor to portfolios. You could start increasing the position size. Think about it as a really wide band. Maybe on the downside, it's 27.50. But that puts Woolworths back at prices it was trading at, almost 10 years ago. So on a yield basis, at about 3.5% yield relative where interest rates are, it's probably not hugely attractive in an environment where it's not delivering much in earnings growth. But history suggests buying it sort of down around that 25, 27.50 level is good value. So if you don't own it, you could certainly just start accumulating some here and give yourself a fairly wide range there. US earnings, Palantir Technologies will be an interesting one tonight. Microchip Technology tomorrow night, watch that with some interest. ARM and Gilead Science, that'll be an interesting one to look at. Fortnite in the cybersecurity space and Block on Thursday. Maybe Paramount. So that sort of covers US or just crude oil. So we continue to be a buyer of this on the pullback, and that's now rallied. So Sort of being long that with the stop loss at 517 still remains a sensible trade. Macquarie Technology, stop loss at around $75. And that takes us back through to last week's webinar. With tonight, what I want to do is just backtrack through the blog post. We haven't done this for a little while, so I'll get the percentage gains to the top, and we'll go through these from buy order. So Transurban found support at around that 12.50. Pretty strong day today under algorithm buy conditions, and the general picture here is support there at around $12. It's switched from sell conditions into algorithm buy, and we've added that into our portfolios. CSL switched from sell conditions there into algorithm buy, so we've been buyers of that. If we have a closer look at it, a trader may kind of wait until this gets above that 10-day average and then put the stop loss below there, which is obviously that's the methodology that the trade table automates, and we'll have a look at that after I finish going through this list. But CSL off that 280 level, traders wait for it to break that moving average, but obviously if you're an investor, you're probably looking at it longer term going. It's been in a sideways consolidation now for about 5 years, and it's sort of at the mid to lower band of that consolidation range, and CSL's obviously got a good track record of growing earnings, so being a buyer of that makes sense. This Cure ETF, so we've been both investing in this and trading it. The investor position here is the switch from sell conditions into algorithm buy. The trader position here, we bought it at around $49. We've sold it pretty close up near the highs there, and that was really just kind of a trade, and it wasn't a core part of our portfolio. But I'd say that the setup still looks reasonably bullish. Really what you've got is a series of higher low formations after the consolidation through 2022 and 23. It's broken out into higher highs, created the higher low. You've now got a consolidation. Normally, you would expect that to break through the upside. So however you're playing this, whether it's from an investing or a trading standpoint, you would have sort of your safety net there at 49.60 if you want to stick with the momentum with that one. Bank of Queensland, we own this both in the trading and the investing portfolio. For a reasonable number of clients, we took profit just under that $7 level. If you're not already in this, you could have a think about it, sort of pulling back down, maybe closing the gap on the weak side would be down to sort of $6.30. But if we look at the pattern here, it's creating higher highs, higher lows. So again, stop loss would either be under the pivot low there at 640 or bring it back a bit further at sort of 605 thereabouts. But the pattern there doesn't look too bad, but again, not a large position in portfolios. Macquarie Technology, we haven't done anything in this one, but the alert here was the switch from sell conditions there into algorithm buy. The original signal there of $60 has obviously performed well, but now we've got another higher low support there at around 73. So start taking a closer look at that. It's not a company I've covered in great detail from a fundamental analysis standpoint, but I'll certainly be looking a bit closer at it. CNU, so we've certainly been buyers of this on the pullback. This has come back into our target range there and looking for that to move up towards $7.50. PEXA, I think you want to be a buyer of this down here at around this $13.50 level. So if you're a short-term trader, you might be a bit more patient. So wait for the price action to get above the moving average there. But ultimately, sort of that value there. PEXA's another one that's kind of broken out from this downtrend, building higher highs, higher lows. So continuing to buy the dips there. And it's supported by a good fundamental growth story as well. Morningstar Global Technology ETF, just highlighting the switch from sell conditions there into algorithm buy, but we haven't done too much there. The Cloud ETF, we remain bullish on that. Collins Food, under buy conditions, you could certainly add that to your watch list. If you want to keep a closer eye on this one tomorrow, you'll just be looking for a close above that moving average. The food ETF, we remain fairly aggressive on this one and continue to build the position size. So we like that at around that $6.50 level versus some of the alternative sort of risk that we see in the market. The oil ETF, so we're bullish on this again. The pullback down there to 515. I spoke at the beginning of the presentation about having your stop loss at around that 517, but I think we're probably looking at higher oil prices rather than lower. GPT, switch from sell conditions here into algorithm buy. As I mentioned last week, they're tilting their portfolio a little more towards logistics, which is great, an area that's likely to offer them better growth. You can see the band there where I've sort of gone $4.50 is probably the midpoint. It is under the moving average, so again, if you're sort of trading, you might just wait for this to get above the moving average there. But within the property space, it's one of the better quality picks with low gearing. Santos continue to like that as a way of playing higher oil prices. Coles and Woolworths, there's not much catalyst. You see they're at 21 times earnings, 3.5% dividend yield. It's expensive, so we're probably a good outcome for Coles and Woolworths is just sideways consolidation, collecting the dividends and franking credits. Pepper Money, we own that in our portfolio. Don't consider it a high conviction or a high allocation. It's obviously a much smaller company than the businesses that we tend to focus on, but we're impressed with the quality of the product service and them starting to win more market share. So being a buyer of it down here, there's room for that in our portfolio. Mineral Resources, so despite all the turbulence, we're happy owning some of this, and we've just gone back into it just in the last few days of last week in our trading portfolio. So we'll continue to come back and monitor that. And now we move into stocks that are under sell conditions. With tonight, let's jump around and have a quick look at the top 100 model portfolio. So this is the investor portfolio. There's been a few new positions. So we've got 1, 2, 3, 4, 5 positions that have dropped in the last week. So I'll just toggle through these and maybe stop at kind of CSL or Medibank, which would kind of cover sort of the last 45 days of what's dropped into the investor portfolio. So let's just have a quick look at these. So AGL switch from sell conditions into algorithm buy, and don't mind the longer term sort of green energy story opportunity there with AGL. Charter Hall switch from sell conditions into algorithm buy. We haven't done too much there. Vicinity Centre now under buy. Soul Pattinson, the high quality business, so you can certainly have a think about that. We haven't sort of added that into our investor portfolios as yet. Cube, under algorithm buy, so these are all ones that should be on your radar and really added to your watch list. GPT, and you might specifically keep an eye on these names and take more notice of when they cross up through the moving average as a shift in momentum. Transurban, we covered off on that, switch from sell conditions there into algorithm buy. Coles, covered off on that. I'll probably even widen this sort of range here with Coles, and probably ultimately it's somewhere sort of closer down to that $17 level that you'd probably get more aggressive with that, which is starting to sort of push it back up towards a 4% yield, which is about right. CSL, we looked at that one earlier. Medibank Private, Flight Centre, Amcor, and Evolution. So that's kind of went past the, I think it was CSL I was looking at stopping at there. So we went past by a couple more. But in your own time, toggle through the stocks that are in the investor portfolio. The performance continues to do very well there. Finishing this evening with a trade table, and it's interesting that we don't have any positions in the top 200 portfolio. We've had quite a lot close out at the end of the month there, so on the 31st of the 10th, REA was closed out after being in the portfolio for 83 days, and then Commonwealth, Bank of Queensland, Computershare were all towards the tail end of October there as well. If we go down to the performance, we've seen that 10% tick up and now a bit more of a sideways consolidation. It's obviously going to stay that way whilst we don't have any positions in the portfolio. Really that explanation for why there's no positions is really a function of when we look at the broader indices. We see them rolling over and below the moving average, so it probably doesn't come as too much of a surprise that there's not many holdings in, well, that there are not any holdings in the model at the moment. But again, just make sure you've got the notifications turned on so you get emailed when something drops into here. And likewise for the model portfolio, make sure that there is green to notify you that the notifications are going to come through. Just to finish this evening with a quick look at what's in my watch list, and I won't go through the charts, but I'll just talk about what I'm focusing on. So certainly the oil trade. I think Tabcorp, you want to keep that on your watch list. It's at support where it is at the moment. Transurban, good for investor portfolios, unless interest rates in the US or in the US really started coming down. I'm not sure there's a catalyst for Transurban to rally just yet, but at 12.50 it looks like the low's in place. Let's just have a look at these in a slightly different order. It's interesting, some of the building stocks off the back of weaker building data really starting to get hit at the moment, so we might come back and revisit those next week. I'll go through my watch list and we'll start to have a look at where there's value or entry opportunities there. The China new economy, I think you want to have that on your watch list and be setting up a strategy there. PEXA is health ETF, keep an eye on that at around 11.37, that's offering value. Collins Food, we looked at that one tonight. Add that to your watch list and just keep an eye on a cross above the moving average. The food ETF, I just think that's a sensible long-term position in portfolios. Bunnings Warehouse, that's been hit pretty hard, so you could, you're probably not going to get a lot of excitement on the upside there unless sort of the environment around interest rates materially changes, but it has sold off a fair bit. Ingham's, so just keep that on your watch list. That's rallied up off the sort of collapse down to around 275, now up to 290, so starting to get a bit of momentum there. GPT within the property space. Brickworks, I think you want to add that to your watch list. Mineral Resources and Pepper Money, we certainly like those too. And that sort of covers it on the buy side. So thank you very much for listening in again, and please take notice of what goes on the advisory blog over the coming days, and I look forward to speaking again next week.